that's my 2 minutes, and I would like to ask now Fulu to talk about South Africa. Talk about your strategy and what the fund is doing and what you intend to do, certainly within the investment area within Africa and your own domestic market.
Okay. I don't know if this is on. Can you hear me?
It is on.
Okay. Good morning, and thank you for the invitation to this summit. My name is Fulu Makwetla. I'm from the Government Employees Pension Fund of South Africa. It is the largest pension fund in Africa. We have assets of 120 billion US dollars. We have 1.2 million active members, so similar to the Ugandan fund, we have a fairly young membership. We only have about 375,000 pensioners and beneficiaries. Our fund is a defined benefit fund, and the composition of the governance of the board is that we have a board of trustees which has representation from labor. It's got representation from the employer, as well as a pensioner, as well as special forces within South Africa. I want to make a correction. Somebody mentioned that the Public Investment Corporation was a sovereign wealth fund. It isn't. It is Public Investment Corporation is an asset manager which manages assets on behalf of the GEPF. So the GEPF, with its governance structures of being a pension fund, is obviously not a sovereign wealth fund. What it does mean, though, given the size of our fund in the market in which we operate, we make about a third of the country's GDP. We understand our role as a pension fund there, and so we do play a significant role. What it also means is that we're pretty much invested in everything in South Africa. And so in terms of our asset allocation, up until 2007, we were 100% invested in South Africa. We started investing in infrastructure in Africa opportunistically from about 2007. A portfolio manager came to the board and suggested that we invest in Pan-African infrastructure development, and that fund came about. I think the formalized structure where we got approval from the minister to obviously increase our allocation outside the borders of South Africa happened in 2010, where we were allowed to now invest 5% in the rest of the continent outside of South Africa, and then another 5% in global markets. The way in which we've done this is, in global market, it's very easy to gain access, and I think at the time, we really just wanted to gain access to those markets. It was, I think back in 2010, we did it into a passive fund, both in equities as well as in bonds. And at the time, the exchange rate was very favorable. It was about a 6.85 rand to the rand. Now it's sitting at about 13.30. That was in 5 years. And so we've just made gains in that area simply from the currency depreciation on our part, because it's pretty much a passive portfolio. On the African continent, we've had investments mostly in through infrastructure as well as private equity. I think the best way to gain that access, given the size of our fund as well as the size of the African continent market, is that we would be too large, perhaps, for some of the listed companies because of the small nature of those of the rest of the listed markets outside of South Africa. We're already large holders of the biggest companies in South Africa. We are holders of 10% or 13 to 15% of the top 40 stocks in South Africa. And so from a diversification point of view, it makes sense that we would go into the rest of the continent. We've done so, and we've done so mostly using infrastructure type funds, which are designed like a private equity structure with an LPGP type structure. We've also gone into infrastructure in South Africa through the capital markets, where, for example, we're large holders of the Eskom bonds, the bonds which are issued by our power utility company, Eskom. We are large holders of bonds in Transnet, for example, which is the port and rail operator in South Africa. We have a lot of bond issuances. We hold a lot of bonds which are issued by SANRAL, which is the road authority in South Africa. And so given the size of our fund and the available universe to invest in, we are large holders of a lot of infrastructure, as well as listed companies, as well as unlisted investments. And so That pretty much, I mean, in South Africa, I would say the market is fairly regulated. The domestic market is probably very liquid on the listed equity side, and so we can move in and out of there. We try not to do too much movement. We mostly hold passive holdings. We do have a component which is active, but we obviously move the market when we make too big moves, and so we're conscious of that. I mean, I've spoken a little bit about our investment in South Africa, I think the infrastructure investments. If I want to move on then to the rest of the continent and how we kind of started with this investments, Pan-African Investment Development Fund at the time, was that we were invested in that fund, which has made investments in power utility in Kenya. We've made investments in airports, South African airport, Lanseria, as well as the airport in Tunisia. Mostly in South Africa, a lot of the investments we have are brownfield, but we're starting to see a lot more greenfield investments in the new renewable space, in new hospitals, as well as affordable housing or student accommodation in those areas. And furthermore, in infrastructure, we do have, for example, investments in undersea cabling in West Africa, as well as a couple of others in the rest of the continent. And how we've gone about this is most of our investments have been done through the Private Investment Corporation, as well as investing through private equity type and infrastructure funds. I think I'll stop there for now.
Yep, that's fantastic. So, you know, a big animal trying to diversify, but in a market that's liquid and looking at opportunities outside.
Doing business in Africa, you can't afford to be without Africa Investor.